Figma got absolutely destroyed in early 2026. Then Q4 earnings dropped, and it literally changed everything. There's one retention number in this report that made me stop and reread it 3 times. Today I'm walking you through every key number, the AI story, and exactly where I'd actually trade this. Figma is pure subscription SaaS. Design teams pay every month, and they just keep paying as long as they're using it. But the stock? Since the IPO, Figma has been under non-stop selling pressure with a really brutal valuation squeeze. That's why this Q4 report matters so much. Is the high growth story still intact, or is it quietly starting to fall apart? Q4 revenue came in at $303.8 million, up 40% year over year. For the full year, they crossed the $1 billion mark, $1.056 billion, up 41% versus last year. Adjusted EPS landed at 8 cents, slightly ahead of what most analysts were modeling for the quarter. Some platforms were actually looking for a loss. Flipping to even a small profit is a real sentiment shift. Remember that. Here's the number I mentioned at the start. Net dollar retention hit 136%. In plain English, that means big customers with more than $10,000 in ARR are paying about 36% more than last year. And 80% of AI users are also actively using Figma design. Just think about what that implies. Now, let's talk profitability. This is the part that makes growth investors the most uncomfortable, so really pay attention. On a GAAP basis, Q4 operating loss was $195.5 million, a negative 64% margin. Non-GAAP tells a very different story. $44 million in operating income, a 14% margin. So, actually profitable. For the full year, operating cash flow margin hit 24%. The engine works. The question is, who really understands that? Bottom line, the core SaaS engine is profitable. The GAAP losses are mostly coming from heavy stock-based compensation. Think about that. Customers are spending 36% more, while the company is still losing money on paper. Both things can be true at the same time. The numbers look strong, so why is the stock still way down from the IPO? That's the real question. Management spelled it out. AI features are already generating real revenue. It's not just something they put on a marketing slide. After hours, the stock jumped roughly 15%. Analysts tied that move directly to the AI monetization comments, but their guidance shows margins coming down as AI investment ramps up. The question is, how long that pain lasts. Institutions hold roughly 260 million shares, about 63% of the float. More importantly, institutions added roughly 68 million shares just in the last quarter alone. That's clear net buying from smart money. It's not big players quietly heading for the exit while retail fights about it online. On earnings day, Figma closed right around $24, with volume spiking massively above the average. Year to date, Figma sold off first, then ripped higher the moment that earnings surprise hit the tape. At the current mid-20s price, I'd only open a small starter position. I'm not going full size up here. My real accumulation zone is 22 to 24. That's where the prior panic selling left behind heavy volume. My stop is anchored to the prior swing low at $19.85. No exceptions. If we get a strong volume break below $19.85, I'm out. That's a rule, not a suggestion. That doesn't mean Figma as a business is broken. It just means my timing and my thesis need a reset. Those are two very different things. AI isn't just hype here, it's actively driving upsell and helping Figma defend its lead in design tools. If growth drops into the low 20s and GAAP doesn't show real progress, the market can aggressively re-rate this stock. If you want number-driven breakdowns with real entry and stop levels, subscribe and hit the bell right now.